Hi, everyone. This is Christine Kopr, VP of Sales with Sotheby's Realty in the beautiful Vancouver, British Columbia, reporting to you for our July market update. June has come to an end and the stats are out, so we're going to delve into that. We're also going to take a look at the Vancouver Eastside Detached Market and find out if that's a dead market or multiple offers everywhere. We're going to talk about new legislation that takes into effect July 18th. If you are a landlord, you need to listen to this. And we're also going to touch on some of the other rumors that are out there about more potential future taxes. Alrighty then, why don't we just get right to it? Every month, we take a look at the stats for the Real Estate Board of Greater Vancouver, now known as the Greater Vancouver Realtors. We're looking at June because those are the stats we're reporting here in July, now that the month of June is over. So how did June fare? Well, we had 2,418 sales. That was down 12% month over month and down 20% year over year. So sales are just not quite where they usually are this time of year. And in fact, they're hovering around 24% below the 10-year average. So this is not new news. This is something that we've been seeing this spring, very different from what we saw last spring and the spring before. Even with this great rise in interest rates, there's a lot of activity for the last couple of spring markets. And even though we had a mortgage rate increase in June, we're just not seeing the amount of activity that is normal, possibly because we have some buyers that are sitting on the sidelines, a little bit concerned about where things are headed. New listings are the new homes that came onto the market available for purchase in the month of June. We had 5,723 homes come on the market. That was down 10% month over month. So not as many homes came on as there had been in May or even in April. And year over year, that's up 7%. So last year, this time, we had 7% less homes come on the market. And we're just only sitting about 3% above the 10-year average with respects to new listings coming on the market this time of year. That leaves us with total inventory sitting at 14,182 homes available for sale at the end of June. That's 4.3% up month over month and a whopping 42% more available homes on the market since last year. We're also sitting just over 20% above the 10-year average. So there's no surprise you're hearing talk about more inventory than usual or a lot of inventory, especially compared to last year and years prior where we had a very limited inventory. A lot of people weren't willing to come onto the market. Now we're starting to see that inventory come on. It is actually a breath of fresh air for anybody that was hoping to get into the market. Guess what? You're finally at a time where there's actually number one, selection, and number two, time to do your due diligence to find you the right home. We're seeing more inventory levels that are closer to, peak COVID years or even 2019 when we were coming out of the beginning of the stress test when 2018, the stress test was introduced. And that had an impact on the market because it was somewhat like an instant increase in interest rates because it limited mortgage qualification for buyers. So here we are, we're finally sitting around that 15,000 homes available in the market. And based on our current level of sales activity, AKA how many people are buying in this marketplace, we're now sitting at 5.8 months of inventory. In the last couple of my market updates, you probably have heard me say it, like, I think we're probably going to see an increase in inventory. We are seeing more listings come on than there is the activity. And I can usually tell by the amount of homes that are listed. If we have double the amount of homes that are new listings, we tend to keep in a tighter market. But for example, right now we've sold 700 homes this month and we already have 2,100 homes listed. So the continuation of inventory coming on the market, I don't think is something that we're going to see change unless we have a couple of other changes happen in the marketplace. Now, you have seen a slow and steady, somewhat minor increase in this inventory. And for those of you that follow me, you'll know that between 4 and 6 months of inventory is considered a balanced market, a market that doesn't favor the buyer or the seller. When we hit 6 months and above, that is considered a buyer's market. There's more inventory than there is demand. And as that inventory starts to accumulate, there's more options, there's more properties. It starts to put downward pressure on prices, something that all buyers or prospective buyers should be jumping for joy about after all this time. We've kind of already started to see that type of psychology and that type of thing play out in some of the prices in certain segments, particularly the condo segment. The condo segments had a lot of hard hits recently. We're going to get into the new one with the new landlord tenancy laws, but of course, a new Airbnb ban and capital gains taxes, etc. I think we're seeing a little bit more condo inventory than usual. So particularly for anyone looking in that environment, I mean, it's definitely an excellent time to be looking in that space and securing a great property for the long run, because eventually, slowly but surely, these interest rates will eventually correct. And I don't know if that is going to be next month, next year, or 5 years from now, but at least you have a safe and secure home over your head if you're looking to enter the housing market. 5.8 months of inventory. We're basically on the cusp of a buyer's market, but when we break it down into segments, we're in buyer's market territory in certain segments. Now, we don't have the stats right now to break down all those particular segments, but we are going to get into the overall look of detached townhome and condos for the Metro Vancouver area. If you want to get that specific information for you, please reach out to me and we'll put together a detailed analysis like this, and we can talk about what's happening in that segment. They're not all behaving exactly how the stats would say, so you really have to be in on it on the street. But what everybody wants to know about is your benchmark price, because this is basically that signal. It's like our stock market, the TSX. How is the benchmark doing? And we are taking the first dip in our benchmark price since coming out of last fall, when things were doomy and gloomy. We had a couple of interest rate hikes during the summer, and we were starting to all second guess, when was this rate increase cycle ever going to come to an end? Now, we had an interest rate decrease in June. We had the first announcement. It was the first reprieve of a quarter of basis point decrease in interest rates, yet the market has not really been stimulated yet by that. And in fact, as I mentioned last month, I suspected that we might be seeing a little bit of a rollover in a lot of the segments, and that's starting to show up in the benchmark price reflected here at 1.207. So we're down 0.4% month over month, and we're still up half a point year over year. Yeah, interesting times, isn't it? All right. So some of these decrease in prices aren't massive, like they're just little trickles. So in some ways you could say that they're negligible. However, in some categories, there is start to be a little bit more movement, as I previously mentioned, like the condo market. How is it looking for your detached townhomes and condos? Well, sales are down 18% for detached homes. Your benchmark price is $2,061,000. Year over year, you're still up 3.8% for those of you that got in the market. And month over month, we're seeing a benchmark decrease of 0.1%, with a sales ratio hovering right over that 12%. And 12%, when we look at the sales ratio versus months of inventory, they're kind of the same thing. It's the absorption rate, how fast are homes being purchased. 12% is when you hit buyer's market territory. In some cases, we're just sitting above that buyer's market territory for detached, but wait to see the next slide, because I want to talk about the East Van market and show you what's happening there. Attached townhomes. Sales are down almost 13% year over year. You're sitting at 1.138 for a townhome in the Greater Metro Vancouver area. Your benchmark price is up 3% year over year, but down 0.6% month over month, with a sales ratio sitting at 21%. So just out of a seller's market into a balanced market, 12 to 22% balanced market. Condos. Sales are down 7% year over year. You're sitting at 773,000, and your benchmark price is only up 1% year over year and down 0.4% month over month. So you can see we have this rollover from the higher level month over month. All three categories have taken a little bit of a dip with respect to pricing. So buyers, beware. Your sales ratio is sitting at 20%, so just outside of that seller's market territory, entering into that balanced market. But of course, you need to look at your segment, because check this out. This is Vancouver East detached homes. Doing a little bit of research here. Here are some properties, lovely properties. I'll share my screen to show you, to give you an example of what they look like. And here you are, 5163 Ross Street, 2 offers, 1 sold subject free. Pandora, 2 offers, sold subject free. East 18th, 8 offers, sold subject free. Kitchener had an offer date, 2 subject free offers. Lily Street, 1 offer in the end, initially expected 3. And there was another one as well that sold with 1 offer and above asking. Ross Street, 1.198 sold for 2.2 million. Wow, pretty looking little house. Pandora, 2.199 sold for 2.232. You have East 18th, the little Vancouver special, listed at basically 2.2, sold for 2.303. Kitchener, listed at 2.349, sold for 2.408. Here's Lily Street, 2.399, and ended up selling for 2.425. And that's the one that ended up with only one offer and sold for over. And there's actually another one like that as well, sold for 40,000 over, even with just the one offer in the end. What that means is depending on your market segment, you can't just look at these high level stats. Certain parts of the market, even East Van lots, you might get a better deal, but guess what? You've got all the multiplex developers looking at that stuff, trying to pick it up at the right price, land value. But move-in ready detached homes that are actually becoming increasingly scarce because they're being torn down to be built into these multiplexes are in high demand. So keep that in mind when we think about market segments that are going to be long lasting in this marketplace. Your detached home is this prized possession. You have a backyard, you have your own space, you're not sharing it with anyone. Maybe you'll have a tenant, but they're somewhat of a coveted property that you're not going to see more of because we're not building more of them. We're actually basically stopped building them unless you're commissioning your own build, and we're tearing them down and turning them into multiplexes or more like townhome type of product. And it's on the entry level side in the East Van market. You're not necessarily seeing that on the west side of Vancouver. So that's also something to take into consideration. The other thing just actually reminds me of another type of property that's probably going to be in demand in the future is going to be large 2-bedroom and den condos, one level living, for anybody that is going to be getting out of their detached property and looking for that type of product where they can actually live on one level for the long term, because obviously townhomes sometimes have more stairs than a detached house. So interesting, not all the market segments are behaving exactly the same. Again, if you're curious about your options or about your market and your space, I welcome the opportunity to put some of this information together for you. Okay, let's continue on because we want to talk about some of the new changes that have been announced this month and are also going to put some further pressure on creating rental housing. So for those of you who don't know it, the majority of rental housing provided to those of us that rent is generally owned by people like you or me, your average mom and pop investor who has been fortunate enough to have worked hard, put some money together and bought a second property or an investment property, and they rent that out to your neighbors and provide housing. I actually looked back at the stats of like how much housing has our government created, which by the way, if it's government created, you're actually paying for it yourselves through your tax dollars. But nonetheless, like they've built nothing. I think it's about 35,000 homes in the last 30 years. Despite the name speculators or investors and landlords, we kind of need those people out there in the marketplace because they provide housing to anyone that needs to rent. If you can't get into the ownership market, you need to rent and you need to start somewhere. And of course, what would behoove rental construction and the offering of rental properties is making it easier for landlords. And our government just recently announced some changes to how to deal with tenancies, and in the name of also adding some more protections for landlords to be able to remove tenants with challenges that are perhaps not following their end of the deal. A lot of the rules are skewed towards the tenants these days. And of course, that makes it really challenging because landlords are on the hook. They risk themselves and their credit and everything for having mortgages on the property and basically giving the rights away to their tenants. And we need to find a balanced approach. But anyways, the point is that as of July 18th, if you have a tenanted property, you are now going to have to give 4 months notice. That's 4 clear months notice if you want to own or occupy the property. And that comes up 2 ways. One is if you are the actual owner of the property and you are a family member, and there's a definition as to what counts as a family member, want to occupy your own property. So to get back into your own property, you have to now give 4 months notice instead of 2 months notice. Number 2, the second way that you own or occupy a property is if you're going to sell your tenanted property and the new buyer wants to move into that home. The buyer is going to own or occupy that property. Under this circumstance, you also need to provide 4 months notice. That is the new rule in the name of protecting tenants. This is fraught with a lot of risk and there's a lot of pitfalls. There's issues with respect to buyers financing, having their approvals last 4 months long, how you need to deliver the notice. From my understanding now is there's going to be a new portal where you're going to submit the paperwork as the landlord owner, and someone is going to review your submission and ensure that it meets the criteria in order for you to be able to be allowed to serve this 4 months notice. Obviously, this is going to create some issues with respect to selling tenanted properties. We've already had landlords reaching out to us because they're at the point where they no longer want to be landlords anymore. Too much of the system and too many of the rights have fallen over onto the tenant side, and it just puts landlords at risk. And so I think what we're going to see is even further lack of rental housing in this marketplace, something that we like truly dearly need more and more of. But if you are an owner of a property and you're considering selling that property, there are definitely strategies that we can take to help minimize any kind of losses, maximize your sale price, and making sure that you are properly informed. I sell about 30% homes either tenant occupied as a listing agent or as the buyer's agent, and I'm also a landlord myself. I know the rules pretty well, and we can prepare you and help you put together a strategy if you have a property that you're no longer interested in renting anymore, or if you come to a point in time where you need to make some changes and you need to sell that property. Well in advance of talking to the tenants, please reach out to us so we can help you. Obviously, if you can get that property vacant, perhaps waiting until that tenant has given their notice, but there are other strategies. So again, chat with us prior to approaching the tenant, and we can provide some guidance that you can then go get some follow-up advice on and decide how you want to proceed. That's one of the big changes that is coming down the pipe July 18th. Here's a quick screenshot that reviews the changes. So the top changes are 4 months notice. You must use your portal to the government. So you actually have to submit and wait for their response before you can actually submit and provide the notice in the effective manner, in the prescribed way, on the timeline that's required in order for it to be deemed effective within the month that you needed to be in order to provide 4 clear months of notice. You still have to provide 1 month of rent, and tenants used to only have 15 days to dispute. Now they have 30 days to dispute. And if for some reason you have terminated tenancy using the owner occupier termination of the tenancy and you've done it in bad faith, now a tenant can come after you for 12 months of rent of damages. So just please keep that in mind when and how you're using this termination. And so I just quickly thought I would touch on the changes that have come into place. I actually don't think this is a complete and exhaustive list because I created one that was much longer than this, but here's some of the changes that have come into our market since 2015. We suggest have the purchase price, land transfer tax, and GST for new properties. There were exemptions on land transfer tax for new properties under $750,000 for brand new properties. But just as a reminder, as we come into an election time and we're thinking about how can we better solve and help those in need, the housing market in general. And here are just some of the changes that have happened since 2015. So you have the foreign buyers tax in 2016. The Vancouver empty homes tax was introduced in 2017. The BC speculation and vacancy tax was 2018. The BC school tax is just basically an ongoing property tax on luxury homes. There's an increase in the foreign buyers tax in 2018, increased property transfer tax. So if your property was valued higher, you pay even more tax when there's a land transfer, i.e. you're purchasing the property. The mortgage stress test came into play in 2018, although I argue that's actually, it hasn't been a bad thing and probably why we're being able to muddle through this really high time with interest rates. We had an increase to the empty homes tax. So that's the Vancouver empty homes tax in 2021. The feds introduced the underutilized housing tax, which is like the speculation and Vancouver empty homes tax in 2022. They've done such a bad job informing the public about it. They've actually had to postpone filing a couple of times because not a lot of people are aware about that tax, and they had a hard time defining what is a partnership and who had to file. So that's been a bit of a masse. And then that's fallen into the federal foreign buyer ban in 2023, following up with the Airbnb ban that came into place in 2024. There was the announcement of the flipping tax in 2024, and I believe there was a federal flipping tax that was announced a while ago, had to do when a lot of properties were being assigned in the past. And of course, there's the increased capital gains inclusion rate. So gains over 50%, where now 67% are included. And of course, anyone that is a small business and has a corporation is 100% taxed. So these are the wonderful things that have come into play. And I've recently heard of another tax that the Liberal government is potentially considering, and that is a home equity tax. And so that is a tax on any home that is valued at $1 million or above. Please keep in mind, this is a rumor. This is a conversation we heard that they had with Generation Squeeze, which is a lobbyist group for young people who feel that prices are out of touch with reality. And they feel that a tax on your home, if it's over $1 million on an annualized basis, you could get taxed and potentially defer that payment. But of course, it be paid upon a sale. So you can see here are some of the potential values at which property valuation, how much you would be taxed that valuation, and what that could look like on an annualized basis. This is not a tax that has been announced. It is just a rumor that this might be coming. Of course, the other side of this is the tax on your gains. So if you're selling your principal residence, that you could be taxed on that gain, because currently it is not taxed. So there's, a lot of rumors going on with further taxation. Obviously, our governments need to continue to raise revenues for all of the things that they want to spend money on. It'd be really wonderful to hear programs where they want to be scaling back or be more effective with their use of capital, but I wouldn't be surprised if this is something that shows up. So just something to consider when you're doing your tax planning or thinking about your future. Obviously, some of the unintended consequences here is a lot of people would pile into the homes that are under $1 million, which would be very challenging because those are the properties that we're trying to get Generation Squeeze into. Anyhow, that is the end of my market update for July 2024. I welcome the opportunity to have any discussions about this information or your thoughts about buying or selling in today's marketplace. Oh, I should mention, while there was this rollover in prices, we recently were able to negotiate an excellent price on a 2-bedroom condo, and then we were able to sell one of our listings within a week with multiple offers. I would say that there's definitely buyers out there. They're looking at the right segment at the right price point. So if you are thinking about selling, you need to be in the realm of what buyers are looking for. It really is a hit and miss. Some properties we would think we're going to just sell right off the bat, and sometimes they end up sitting, but every now and again the right ones come along, they present well, they're easily accessed, and they're priced right, and they get sold. So there is a market out there. It is not dead, it's still existing, but we all need to be in the realm of what's right for that product type. And so if you're thinking about selling a property, connect with me. I'd be happy to give you an evaluation and also a little bit more insight as to what's happening in that segment. And buyers, this is your time to shine. If you want some help with that, there's a lot that takes place when you're buying a property. And now that you have the time and you have more options, it is the time to get out there and start writing offers if you're in a position to buy a home. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC, and I look forward to connecting with you next month. Make sure to like and subscribe, Instagram, YouTube, for any updates and any other information that we're posting all the time. Cheers.